Yesterday, the euro suffered heavy losses against the US dollar, pulling back to one-week lows. The British pound also slid, weighed down by strong US data, but its bullish correction remained intact. The risky assets came under pressure from the outcome of the European Central Bank's policy meeting. The regulator kept its main refinancing rate and deposit rate unchanged at 4.5% and 4% respectively. ECB President Christine Lagarde affirmed that the central bank might begin lowering interest rates from around mid-2024, but remain data-dependent. Although the ECB met market expectations, the regulator reiterated that it would keep rates high for a sufficiently long duration to bring inflation down. Then, data showing that the US ended 2023 with a bank-fueled bearish sentiment in the market. The US economy unexpectedly expanded at a 3.3% annualized pace in the final quarter of 2023, well above the 2% expected by economists. The fourth quarter growth was driven by slowing inflation and the surge in retail sales. This indicates that the Federal Reserve will hardly rush into interest rate cuts, which in turn supports the greenback. Before we get into technical analysis, let's take a look at today's macroeconomic calendar. It includes data on consumer confidence in Germany, lending to households in the euro area, as well as the M3 measure of money supply. However, these reports are of secondary importance and are unlikely to have a severe impact on market sentiment. The focus will be on the US core PCE price index. Economists expect the indicator to rise by 0.2% in December on a monthly basis and 3% from a year ago. In addition, traders may take notice of US personal income and spending. If consumer spending increases, the greenback will most likely extend gains. If data signals easing inflationary pressures, the dollar will face weakening demand by the end of this week. In this case, the euro and the British pound will have a chance of entering a slight bullish correction. And now let's move on to technical analysis. According to the 1-hour Euro-American dollar chart, a false breakout at 1.0823 will create a buy signal, with the euro recovering to 1.0852 and 1.0874. At these levels, short positions can be considered only amid a false breakout. If the price breaks through and fixes below 1.0823, a strong sell signal will be generated. In this case, the euro will dip to 1.0782 and even 1.0744. At the level of 1.0744, I recommend going long on a rebound to catch an intraday correction of 30-35 pips. Going long at 1.0782 and 1.0823 will be relevant only in the event of a false breakout. If the euro wins back yesterday's losses, it will be possible to go short on a rebound at 1.0900, counting on an intraday correction of 20-25 pips. Speaking of the British pound, the situation is similar. A false breakout at 1.2681 will make it possible to buy the pair in the hope of a rise to 1.2714. If the price breaks above this level and tests it from the top down, the volume of long positions will increase further, with sterling climbing to 1.2740 and probably 1.2771. At the mark of 1.2771, traders are recommended to go short on a rebound to catch an intraday correction of 25-30 pips. Short positions at 1.2714 and 1.2740 can be opened amid the false breakout. In case of subdued buying activity and strong US data, a breakout and bottom-up test of 1.2681 will create a strong sell signal, dragging the British currency down to 1.2649 and even 1.2623. At the level of 1.2623, traders may go long on a rebound, counting on a 20-25 pip correction. Long positions at 1.2649 will be relevant only amid a false breakout. Good luck and have a nice weekend.